Hello traders, today is March the 28th. My name is Double Hornsey, market analyst YouTrading, and today I'll be taking a look at the week ahead. Okay, we're starting with the YouTrading.com Forex heat map, and London session on Monday has started with a weak yen, a strong US dollar, a strong Australian dollar, and a strong Chinese yuan. So we're not quite risk on, risk off, but we are seeing good reasons to go long dollar yen or long Aussie yen. Go to the Forex economic calendar. Looking through, we've just had a daylight saving time shift. So the UK, especially on British summertime now. Next week, we get the Antipodeans move their clocks forward. The US have already done it. So come first week of April, everyone will be trading in their normal sort of trading sessions. Going across here today, Monday, 28th of March, we've only got Bank of England Governor Bailey speaking. That is scheduled, which could be market moving. It's an online event. It's talking about macroeconomics and financial stability. I doubt there's going to be monetary policy change or forward guidance. So I'm going to disregard this one today because the news headlines, if you like, are going to keep the first part of this week moving. We've got Russian Foreign Minister Lavrov says President Putin never refused to meet with Ukrainian President Zelensky. However, they need to have the meetings well prepared in advance. So it's not going to happen this week. We do have Ukrainian and Russian sort of delegates speaking in Turkey this week. So we're hoping to get some sort of moves towards, well, the Ukraine have already said that they're going to not pursue NATO membership, even though they do want to pursue European membership. They're looking for some sort of security guarantees. Obviously, they've got no nukes. They're willing to demilitarize quite considerably to appease the Russians. It'll probably come down to the eastern blocks of Ukraine, which Russia's kind of trying to take over, and that sort of land corridor down towards the Crimea that they took in 2014. The news headlines are going to sort of dominate as they have been the last few weeks. So with that in mind, going to the economic calendar again, everything that happens between now and Friday is probably going to be undone at the point of the non-farm payrolls. Obviously, last month, 678,000 was a good, well, extremely good number. They're expecting a drop this month, 485K. Got ADP on Wednesday. That's kind of in that sort of range. So ADP and NFP have come together again, like I sort of predicted a couple of months ago after there was that massive divergence, which seemingly was on a bad data point. So yeah, everything that happens between now and then might get undone come Friday. And to be honest, with NFP, it's normally like a big up, big down, big sideways come the end of Friday. So next week is probably the best week to start trading any of this data that comes out this week. Tomorrow, Tuesday, jobs openings. We've got the jobs here, 11 million jobs, massive amount of job openings. Obviously, that plays into the Fed dual mandate. They're expecting to see full employment and price stability, and that brings us down to March the 31st. So the last day of March, core PCE, that's going to be the second part of the Fed mandate. If they consider that we're pretty much at full employment for this kind of market, they need to sort of see core PCE stop rising as fast as it has been and get some sort of price stability. Obviously, the market's expecting now, several 50 basis point hikes to try and get inflation down. The Fed are going to try and avoid a hard landing, which would mean crashing the economy. However, they obviously do want to sort of constrain prices, and that can be detrimental to the stock market. But we'll have a look at that later. Obviously, ADP, like I said, on Wednesday, that's a good indicator of what might happen on Friday, assuming that they're in line now. But other than that, final GDP maybe Wednesday, showing that quarter on quarter, 7.1%. So 7% GDP is really good for the US. Obviously got crude oil inventories. Crude's obviously been in the sort of news because of what happens with Russian oil and energy. If we go back to the news headlines, scroll down, We see here this headline says that President Putin has instructed the Central Bank of Russia and Gazprom, which is the largest supplier of gas, to use the ruble in gas sales transactions to unfriendly nations by March 31st. So that's a massive shift in monetary policy for Russia. Right, actually looking at oil, if we open up the active trader sentiment indicator, just scroll down to find Brent. We see 86% of traders are still trying to go long Brent. We did see on this daily chart, this is Friday, so this is Thursday. Thursday high is turned into a swing high. Thursday's low is acting as resistance, so around the 113.5 is acting as resistance. If we take out Friday's low, and then come down to like Wednesday, Tuesday, we could come all the way back down to the beginning of last week, around $106 per barrel. I'm expecting that to happen. We did obviously get a swing high at the 0.618 fib retracement. So lots of traders were looking at that. $120 a barrel obviously was also a big level. So we could even just pass through these intra-month support levels and just go straight for the swing low down here on peace talks. Right, going to the dollar. Now, for me, the dollar is in an impulsive move to the upside. We had this sort of impulsive move here, obviously pretty much all green. So I'm going to say that's wave one. Then a big deep retracement, wave two. And then we've had another impulsive move to the upside, obviously longer than the first one. So in terms of Elliott wave theory, that coincides and works. So now we've had this triangle again, the wave two, wave four are opposing. They're not the same sort of pattern. So again, Elliott wave theory says this is legit. So fifth wave, last wave of this particular impulsive move, going higher. Obviously fib extensions out to $100. We kind of get a bigger extension all the way up through to the 4.2. So maybe at some point, if you like, up to $107. For me personally, I'll be happy with just getting back above 100. So I'm expecting to see dollar rising into the NFP this week. So continuation higher, and that's going to affect all the other crosses. So if we look at the pound versus US dollar, see the pound is coming down. Once again, you could do the sort of, where might it go sort of thought. So swing high, swing low, lower high, lower low, down to the 1.618 fib extension. If we take out the lows from middle of March, then we're heading down towards the 1.25 sort of level, maybe even lower, if you were to sort of expect these fib extensions to get hit in the future. Euro versus US dollar, similar sort of pattern. Double top up here, failed test of that double top, making it a triple top. If we look to the left, if we were to get above this liquidity, above the 1.1115, then we're heading up to the 1.16 quite easily. However, 1.13 acted as resistance, big pivotal level since the end of last year. So now I'm going to just sort of say that swing high, swing low, failed high, hit the 1.618, and now we're again coming back down towards parity. You can see here, if we were to go all the way to the sort of end point of this fib extension, we're actually below parity, down to 0.98. So something to consider. What could that, the catalyst be, if you like, for that? It could be just a continuation of the trend, obviously. So sometime in the future, get down to 0.98. It could be an intensification in the war in Ukraine. So if Russia just ditch peace talks, I'm waiting for a collapse in the euro. However, obviously, parity has been talked about for many years, never really got there. So if we were just to sort of sweep the March 2020 lows and go down to this 2.618, 1.044 on the sort of level, I'll be happy with that. So waiting for euro to come down lower. Dollar yen, with a stronger dollar, weakening yen, the Bank of Japan are willing to buy as many of their bonds as it takes. If you can see here, Japanese yields are 0.25%. US benchmark yields are 2.5 at the moment, and rising since last year. So dollar yen looks like it's going to go a lot higher. waiting for some sort of pullback like we had here. So waiting for a red candle, see if we get back down to some sort of support, 122 maybe, and then continue buying. I wrote this morning that the actual dollar yen has now broken out of this massive sort of trend line. So pivot low here, 1978. I wasn't going to sort of use that one because it was support, but we had like this resistance in 1986, in 1990, 1998, and 2015. So massive trend line, depending on how far you want to go back, really. Broken out of it, big bullish impulsive move. So yes, we could get a pullback, but I don't think we're going below it for a long time now. Right, looking down to dollar CAD. So looking at dollar CAD, obviously with oil at elevated levels, CAD had been rising. So dollar CAD had been sort of depreciating. Going down to a daily chart, we've got this double bottom here. We've got an impulsive move on Friday to the downside. Bears were in control, obviously at the close, looking for a sweep lower. Just a look below the 1.245. Then we've got this balance area here, quite messy. So if oil was to come down, I would expect the dollar CAD to go higher, back up towards the 1.28, taking out this resistance sort of levels at 1.267 and 1.275. Safe haven flows, obviously, in times of disruption, you'd expect to see the yen actually get a bid. We've seen the opposite, and we expect to see gold to go higher. We're actually seeing that go down now. So maybe these peace talks are enough of a sort of sentiment shift in investors' minds to see dollar go higher and for gold to come off. Looking through all of the highs that we can see here on the daily chart, they've pretty much all been tested. We do have a high here which didn't get tested. So February the 16th, 2022, around 1871 an ounce. That could be tested. We've gone through this 22nd of March high. So that's the next one, 1871, and then maybe all the way back down towards the low 18s, maybe below 18. Obviously, $1,800 an ounce has been, like the 1.13 for euro, has been a heavily traded level. So there'll be some buyers and sellers willing to sort of participate in the markets all the way down there. It looks like we're going to take out a swing low. So if we go swing high, swing low, lower high, a measured move down would be 1788. So that's a good target to go for into the sort of lower demand level here from early January 2022. So that's kind of it, really. I think the dollar move is the big move, and I think NFP is the market's focus this week, other than the news headlines, like I've said, out of Russia and Ukraine. So you have to keep your eyes and ears open on Twitter for what happens in Ukraine, and then you have to sort of keep your eyes and sort of wits about you when we've got some sort of tier one data point coming out. Expect it to reverse at some point if it goes against the dollar. And yeah, wait for the NFP on Friday. Good luck, and I'll speak to you again tomorrow.